Okay, good afternoon. It's Sunday, 29th March, 3:49, and I'm recording the weekly analysis for the coming week. Sorry, the weekly forecast for the coming week. Okay, let's go straight into it. It always starts from gold. Okay, so for gold, it's pretty simple. I have my levels marked out already, and let's start from the weekly. For the weekly, this is what happened. This was an engulfing bearish candle, came down rapidly and impulsively with a heavy bearish close, and the close was also near the lowest point it could go for the whole week. So we have an understanding that market makers or market movers, the people who control the market, are trying to reprice price lower. You get it? So they are trying to reprice this whole gold chart. They are trying to make it go lower. And then another reason why this happens is I discussed with one of my friends, I discussed with one of my good friends, the reason why gold is going lower in times of war rather than going upwards is because the war is happening in the Middle East where oil is abundant. You understand? So the price of oil is going up due to the conflict going on right now. Do you understand? So for countries to buy oil now, they are going to have to pay more for oil. The reason being that it's going to take more to transport the oil to that country. It's going to take more to produce the oil. So all that input, more that is being taken, right, is going to be added to the cost of the oil. So the producer is not going to bear that cost. The producer has oil, right? The producer has oil, but the producer is not going to go at a loss for producing oil for you. If it cost him $800,000 to produce that oil for you, he's going to split that $800,000 on board for the oil, such that the money you are paying for the oil is going to pay for the oil and also pay for the production cost of the oil. You understand? So those amounts will be added to the total cost of the total amounts they sell the oil to you. So if you are buying the oil for $500,000 per barrel, now because of the war they sell it $1.5 million. Now that means you have to pay more for the oil, and when you are going to have to pay more, you have to sell your reserves. And most countries have their reserves most countries' reserves are their gold. You understand? So instead of the price of gold to be going upwards in times of war, rather is going lower. Why? Because countries are selling their gold to have more money to buy oil and store it. You understand? So the price of gold is going lower. It's going lower and lower. And last week swept the lowest point. The first swing low structure. This is the first major swing low, and it got broken. This is the first one, this is the second one, but this is the major one. It came down, swept the liquidity resting below that low, swept here too, and then came all the way to this other block, hiding in this consolidation pattern. You see, now since we have an understanding that price wants to go lower, and this candle is a doji candle. That's what pure candlestick traders call it. It's a doji candle. That means it's an indecision candle. It didn't close in a buy momentum, it didn't close in a sell momentum. But from what the candle did, you can see that it was a sell candle, but then buyers came in and took charge. That's if you are interpreting it according to candlestick trading. You understand? So that's the interpretation of it. But then what I see here is an attempt to balance the imbalance that happened over here. So market makers are attempting to reprice the price. They attempt to balance the market. When we say balance the market, it's like sellers have gotten big offers, and then it's leaving buyers to not participate in the market, kind of. how do I put this? It's like uh, okay, now let me explain this. It's like you are producing a good, right? You are producing phones, right? Now there's a surplus of phones in your garage. There's a surplus of phones in your inventory. You understand? Now, because there's a surplus of phones, like there's an exceeding amount of phones that you projected that you sell. Because there's a surplus, right? You're going to reduce the price of the phone. You get it? So when you reduce the price of the phone, the price of the phone will come, let's say it's at $5,000, you reduce it to $2,000, right? That's going to cause more people to buy the phone. You get it? So for you, the producer, you are selling the phone. Your stocks are like your inventory is going down, 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 down. Now, buyers have not gotten a chance to participate in the market because no, buyers are participating in the market, but let's look at this from the angle of the producer. People who are coming to buy from you, people who are coming to buy from you, right, have it at a cheap price. That's why they are buying more, because people too are buying from them, right? So they can raise the price. Now, if you see all that going on, then you say, okay, because people are buying more, let me shift the price back higher so that I can push the equilibrium price from point A to point B. So I'll come to a better point. You understand? So when I come to a better point, me as a producer, I'll still be earning profit, like more profit, better than the one that was at point A. Do you understand? So this is simply it. All those yapping, if you are not an economist, or all those yapping is that if I've sold to this point, I want, me as a producer, I want price to come back to a good equilibrium point so that I can sell again. So I'll intentionally increase the price. You see, when I'm increasing the price now, people people are no more like, I'm not selling as much. Like I came all the way down. Instead of me to continue going down, I'm not selling as much. I started rising because people don't want to buy again. You see, it's rising. Now people are buying at like a higher price because sometimes people are late to trends. Before they enter the trend has already happened. Maybe like the Ghana jersey like this, it started trending from February, inside February, you understand? People started buying it. In March, the trend was upwards, you understand? Middle of March, the trend started going down, you understand? Like the trend is going down again. Now people are selling their Ghana jerseys more again. Do you understand? It's because now the price has gone high. People don't want to buy again, but the price is going down. No, the price has gone high. People don't want to buy again, but late people, the people who arrived into the trend late, right, are seeing mass number of people wearing the jerseys. So they also want to watch to fit in. So they'll start buying the jersey at a high price, at a high price. That's somewhere here. It's going high, it's going high. They'll be buying, they'll be buying, they'll be buying, they'll be buying. Now, in an attempt to make the market balanced, market makers are going to drive price towards old highs. Do you understand? To sweep liquidity and then continue going down. So let's say next week candle is going to open, sweep above this candle, and maybe go all the way here. You understand? Sweep this high. When you go on the lower time frame, this is a high. You see? So sweep this one too, and come into this imbalance, or go all the way here, come into this imbalance before falling. Do you understand? Now, if you buy your Ghana. So let's say the late arrivals to the trend, they buy their Ghana jerseys, buy. Now it gets all the way here, then the trend comes again. Now producers are producing, right? They are producing more, and then now it's in the market that there's a surplus of what? Ghana jersey again. So now it is at a premium price. You can buy it at that price, and then you will not lose. Do you understand? It's at a good price. Do you get it? Sorry, it's at a discount. Oh God. It's at a discount price for the buyer, but a premium price for the what? For the producer. Do you understand? So for the producer, it's going up, it's going up, it's going up, it's going up. Now it has come to this point, and then you started selling it. You started selling it. You started selling a lot of it. You see, now people are buying more of it, and then you are selling it, selling it, selling it. It's going down, going down, going down. going down, going down, going down, going down until your inventory goes down and goes below the old low that was formed in the first place. Do you understand? So that's how it works. So the whole reason why I went into that producing jargon is that market makers are going to try to reprice the price of gold. They are going to try to reprice it higher so that buyers can participate in the market. Do you understand? People who are buying gold late, or some people who want to sell gold at a good price again. Do you understand? They have to participate in the market. So price is going to likely go above this high or go above this high too. So let's target these places. 4736.64 is going to go all the way to these points. That's what I'm targeting. Understand? If price takes out this low, I'm going to wait for more clue in price, for price to tell me what it's trying to do before I participate heavily. But if it goes above this high and is showing momentum, then that my next target will be here to take out this high before coming down again. You understand? So that's my take on gold for the week ahead. Is higher prices, then fall back down. So go all the way up, take out this high, then fall back down again with momentum. I told you, if you're expecting bearish prices or bearish movements, right, what you should be convinced about when price is doing, what you should be happy about, market what you should be happy about when market is doing what it does is that it goes higher. You understand? When it goes higher, it goes to one of two things. It either goes to old highs or imbalances, bearish imbalances. So it either goes to old highs, that's 1, 2, or enters this imbalance, or goes all the way to the high and enter an imbalance again. What is more accurate is an imbalance above an old high. Is very, very accurate. It has a high chance of going to all the way to that point. So this is what I'm looking for, something above here or all the way here, then a sink down below all the way, targeting this place. You understand? That's great. Now BTCUSD. So for BTCUSD, I forecasted that it's going to come all the way here, but let's look at this. This wick, right, this wick to this candle shows a resistance zone. Now if you've played around with candlesticks for a long time, you understand that when you see a wick on the higher time frame, it's just an order block on the lower time frame. You understand? So on the lower time frame, look at what we found. On the higher time frame is just a wick, but on the lower time frame, look what is around that wick area, an order block. Do you understand? And then the other block is there to show us that it is holding as a resistance to stopping price from going upwards more higher. Do you understand? Initial target would have been go all the way high, clear out these highs, and then enter this imbalance. You get it? When you enter this imbalance, then it can fall again. But then it didn't do that. It started falling all the way here, and then you can see from here it gave an impulsive fall, climb all the way back up, took out this high, that's liquidity above an old high, swept, entered this imbalance, fair value gap, and then fell again. So I'm looking for that same pattern to happen. Enter somewhere here, fall all the way down, take out this low again, chase this one, or come all the way here. As for this one, I'm not sure of how far down it will come. I think for it to come all the way here, it will require more time. You understand? But price action can shock us. It can happen tomorrow. You get it? So but for my buyers on BTC USD, I'm also looking for BTC USD to do a little rise, maybe come into this order block section. Yes, come into this order block section. That will be above this candle. That's an old high, liquidity swept, fair value gap, imbalance, touch, mitigated, and then drive back down, targeting these lows, this low, and possibly this low. You understand? So bearish on BTC USD. XAGUSD moves in close correlation with gold. So if we are making an analysis for gold, you would know that the same bias is expected of XAGUSD. So if I'm saying gold is going to go low, I'm also expecting XAGUSD to go lower. But before the price goes lower, what are we expecting to happen? We are also expecting higher prices on XAGUSD. You can see that Friday closed in the previous candle, that's Thursday. Friday closed in the range of Thursday's candle. So what we can expect is an open, a gap upwards, take out this high, this high, this high, and possibly come into this fair value gap or imbalance. You understand? So we are looking for, I told you, anytime we are bearish, right, and price is going higher, we are looking for it to go above old highs and enter an imbalance and come down, or sometimes an order block, right? Most times on the higher time frame you see wicks and you see imbalances, but when you go on the lower time frames you find order blocks. Those are the levels you should be looking for price to get to. So something such as this, right? You understand? If it goes above this high, I'm expecting to see a reaction somewhere here. If this block doesn't hold, it's going to do a pierce above it, right? And then a break in structure. So the reaction that happened towards at the point of this order block is going to form a breaker block, right? It's going to fall below that block, and then we'll know that okay, price is going to go upwards but not above the breaker block. Then we can take our entries from there. By the way, silver is very, 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 very volatile. So I do analysis on it, but I don't trade it if I've not seen a very, 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 very good setup. You understand? As in, I'm convinced that this setup is going to blow. Apart from that, I don't look at silver because it's very, very volatile. You can clear your account in seconds. Silver is not anybody's mate. You understand? People talk about gold, make noise about it, but they've not experienced silver. So yeah. I've not seen people posting screenshots of silver before like that. There's only one guy that I've seen posting screenshots of silver. I think his name is Stacy Becky or something like that. Yeah, he trades silver. He's a good trader. I'm on his YouTube even. Yeah, I'm spoiling this thing. Okay, XAGUSD, Euro USD, nope. DXY, nope. GBPUSD, yep. Okay, so for GBPUSD, I don't need to talk much on what GBPUSD is doing. If you go on the weekly time frame, you would see why I outlined this section. So I'm going to make it more thicker. Yeah, I have somewhere to be. I'll post this thing fast and dash. So yes, this is another block. You understand? I told you that on the higher time frame, when you see a candle with a wick, like a wick, is possibly a lower time frame order block. You understand? So this order block is going to prevent price from going higher. Why? Because the imbalance here, or the imbalance in price that happened all in this range, has been balanced over here. Price has been mitigated. It has mitigated this imbalance. So it's going down means that this place is going to hold as our what? As our new resistance level. Do you get it? As our new resistance level. Then market went down, came up, came down, went up again, came all the way to this point. It was almost close to the high of that previous high. So I circled there as an imbalance. No, not an imbalance, a relatively equal high. You understand? A relatively equal high, because price can visit there anytime. It can come all the way up and visit this place again. You understand? Anywhere there's double highs or old high is a suspect for price to visit. So for GBP USD, I'll see something like this can happen. A chase all the way down to this low. Yes, price will come all the way down here, and we can already see that in its current price action. This candle closed right at the low. Let's see, low 32603, 32612, just a few pips away from the low. You understand? It should show you that market makers are really trying, right? Like there are possible ways to reprice price lower. Understand? Maybe if we open, we'll see a total gap downwards, taking out this low, or a retracement upwards, just a small retracement, and then a gap lower again. Do you understand? So it's already giving us indication that it's trying to come lower. All we have to do is find a place exactly. So it's going to take out this low, maybe come and then bounce in this order block. If it doesn't bounce in this order block, then it's going to chase this low, and then we'll see a new low forming in GBPUSD. So that's all for weekly forecast today. I hope to see you on the next one. Good luck and good trading. Bye bye.